Welcome back to my YouTube channel. And before you continue watching this video, please subscribe to my channel. And I'll attach my number on this video so that you can WhatsApp me for classes on business data analytics, which will start on 21st of this month. Thank you so much and welcome once again. So today I'll do a question on VAT, which was tested in April 2024, question 25. So I'll read the question. Mwanaisha began a sole trading business dealing in electronic goods. She's registered for value-added tax, that's VAT. Details for the month of March 2023 are as follows. So we have sales, we have standard rate at 1900, zero rated for 418, exempt at 342. Number two, customer for the sales at standard rate are offered a 5% discount if they settle within the same month. Usually, 40% of the customers take the offer. Yeah, you can see the standard rate. The total sales for this month of March 2023 was 1900, but only 40% of this take the offer of the 5% discount. Yeah, so I'll come to that. Let me just read through so that I can come back and explain each additional information. So I'll go to number 3. Cash purchases, we have standard rate at 1200, exempt at 500. The number 4, the exempt sales were all from the batch of exempt purchases with some remaining in inventory at the end of the month. Yeah, so some will be the closing inventory. When you check here, you'll realize that the exempt sales were only 342, but what was purchased was 500. So the difference, which is around, which is 150, 158. Yeah, 158 will form part of the closing inventory. Yeah, you have to note that. So I'll go to number 5. During the month, Mwanaisha paid rent for the business premises for the month of March. Rent is charged at shillings 80,000 per month. Number 6. The business reported actual credit losses of shillings 280,000 and another expected credit loss of shillings 50,000. Number 7. A supplier from whom the business had made purchases of shillings 292,000 and a customer to whom goods were sold at standard rate in January 2023 and still owed shillings 325,000 were declared bankrupt. Number 8, at the end of every month, Mwanaisha prepays the electricity for the following month using prepaid meter tokens based on standard usage. She paid shillings 42,500 for April 2023. But she had prepaid shillings 38,500 for March 2023. Yeah, so I'll come back to clarify that. So I'll go to number 10. Other expenses paid during the month, we have telephone bill of 13,200. We have audit fees of 111,000. We have stationery of 36,000. Then we go to number 11. Mwanaisha made donations to registered charities consisting of shillings 100,000 in cash and shillings 280,000 in form of goods. Number 12, closing inventory for the month of March 2023 was valued at shillings 340,000. The note, all transactions are quoted at the standard rate of 16% unless stated otherwise. So it means that this transaction was quoted at the standard rate of 16%. So it means that they were VAT inclusive. Yeah, they were inclusive of VAT. Yeah, all has been quoted at a standard rate of 16%. So the first thing to note is that if they're quoted at the standard rate of 16%, then it means that they are inclusive of VAT. Yeah, you can see then under the audit fee, they're saying audit fee including VAT is this. Yeah, so when they're inclusive, then it means that the VAT charge will be 16 over 116%. It's the same way you say if the total, like now, for example, the audit fee, which is 111,000, equals to 1 represent now 160,000 if it is inclusive of VAT. So you ask yourself, what about 16%? which is VAT. Yeah, what we are told is the standard rate. What about the standard rate, which is 16%? So you take the 16, you multiply by the expense, then you divide by 116. So we'll multiply all the transactions with 16 over 116. Yeah, that's the first thing. Then the other thing is the format of the VAT account. So the VAT account always has the input VAT and the output VAT. So under the input VAT, we have the opening inventory, which in this question, there was no opening inventory. Yeah, so the next item is always the purchases under the input VAT. So purchases, we have local and imported, and they all qualify for VAT. Yeah, so the other item will be the debit notes received. The debit notes received. Then the other item under input VAT will be the credit notes issued. Then we will have the VAT payable. Yeah, so the VAT payable will be the balancing figure between input VAT and output VAT. Then on the output VAT, we'll have sales, which will have the local. Then there's also export. For export, they are zero rated. Yeah, the exports are zero rated. Yeah, so we assume that most sales which are zero rated are exports. Yeah. So then there's also debit notes issued. There's credit notes received. Then we have the closing inventory on the side of the output VAT. Yeah, so the balancing figure will have either VAT payable or VAT refundable. So the VAT refundable will be on the output side of the output VAT. Yeah, so without much ado, I'll start this question, do the question. So I'll start with creating the VAT account because that's what is required. They're saying required the value added tax payable stock refundable for the month of March 2023. So I just come here and write the VAT account. The account. So let me just bold it. I'll bold it. Yeah, that's okay. So we'll have a column. So we'll have input VAT first here. So this is what I will do. I'll create a bottom border. Go to home. Then create a bottom. That's it, bottom border. Sorry, let me undo that. So let me just put input tax here. Input VAT, sorry, input VAT. Then the other column we'll have, let me just increase this. Then here we'll have the output VAT. Yeah, so this is the format for the VAT account. So this question, this was the first thing you are supposed to do. You have to know the format for the VAT account because you can't work on this question without knowing the format of the VAT account. So this is what I'll do. I'll go to home. Then I'll create a right border. So this is what I will do. Let me just highlight it. I don't know where it will end, but let me highlight this all through. Then I'll create, you go to home, then you go to borders, then you create the right border. Yeah, so I'll just pick this, click that. Yeah, and you can see I've created a border there. Yeah, so let me just extend this a little bit. Then I also extend this. Then I'll highlight that and create a bottom border. So go to home and create thick Yeah, let me create the thick bottom border. Yeah. Yeah. So we have the input, the output, VAT. And we say that all these VAT are inclusive because at all transactions are quoted at the standard rate of 16% unless stated otherwise. Yeah, unless stated otherwise. Yeah, so as I said that when they are quoted at 16%, then it means they are inclusive of VAT. Yeah, they are inclusive of VAT. Yeah, so I'll start with the input. So the input, I'll check whether there was an opening inventory. Then there was no opening inventory. So I'll start with additional information number 1. So 1 is sales. The standard rate, 1900 zero rated, 14 exempt, 340, 42. So sales is an output VAT. So I'll start here. Yeah, so I'll just write sales. Yeah, so I'll start with the sales. So I'll start with the standard rate. And there was additional information number 2 where they say customers for the sales at standard rate are offered a 5% discount if they settle within the same month. Usually 40% of the customers takes the offer. So here is a point where you have been given a discount. Yeah, a discount. So VAT is always calculated after deducting the cash discount. So the first thing I will do, I'll check for the 40% of the customers and a standard rate. So this is what I will do. I just say equals to, then I say 40% times standard rate is 1900. Yeah. So I want to get those 40% that buy goods on discount. So this was 760. So this 760, yeah, because I told customers for the sales standard rate are offered a 5% discount if they settle within the same month. Usually 40% of the customers. So 40% of this is 760. But this, they are given a standard rate of a discount of 5%. So I'll have to calculate the discount so that I can calculate the VAT minus the cash discount. So this is what I will do. So now that I have this, let me just undo this. I was not supposed to do it there. So let me have my workings here. So this is what I will do. For additional information number 2, I'll get the 40% times 1900. Yeah, so these are the people who pay immediately within the same month. And we know there's something what we call the tax point. Yeah, the tax point is when VAT is actually calculated. When you do purchase or you do sales, it is at exactly at that point is when you calculate the tax for the value added tax. Yeah, so whether these people pay 40%, the 40% pay to get the discount, even the remaining, yeah. So when we have 760, now the remaining, yeah, the people which do not go for discount will now be 1900 minus 760, yeah, 1140. Yeah, so for the 1140, we'll charge the VAT directly. We'll charge the VAT directly. But for the 760, we'll charge the VAT minus the discount. So this is what I will do. So I'll calculate the discount. Yeah, so the discount was supposed to be 5%. So it equals to 5% of the amount, which is 760. Yeah, so that's the discount. So the discount is 38. Yeah, so I'll take 760. Yeah, so I can just say discount. Yeah, so this will be, yeah, so I'll say this will be equals to bracket 760 because we say that when a discount is given, then the VAT is calculated minus the discount. So I'll take the amount minus the discount, then I'll multiply by, I said that the VAT rate was, all transactions are quoted at the standard rate of 16% unless stated otherwise. Yeah, because they are not talking about inclusive or exclusive VAT. So my thought is, as you can see, this is the guiding principle. When you go to additional information number 10, it's guiding us. Telephone was this, they are quiet. But for audit fee, they told you that it's including VAT. So it means that all transactions are put at the standard rate of 16%. Then it means that these rates are exclusive. Yeah, they are not inclusive. Yeah, they are exclusive. So when they are exclusive for VAT, then we'll multiply by 16%. Yeah, so I'll multiply that by 16%. Yeah, because that's the standard rate. Yeah, I'll multiply by 16%. Yeah, so for those who are given discount, this was the VAT that they paid. Because we say that for discount, you have to subtract the discount rate is when you calculate the VAT. Yeah, so I love that as my VAT. So I'll go to the remaining part. Under standard rate, only 40%. So I'll go to the 60%, which is here. Yeah, so the 60%, yeah, we'll also pay VAT. Yeah, because VAT, if you look at the tax point, so they will also pay. Whether they pay next year, VAT is calculated when sales have been made, the exact date when the sales are made. So I will just say the standard rate. I just say standard rate now. Yeah, standard rate. Yeah, this is what I will do. Yeah, just put the values here, down here. Standard rate now will be this times 16. Yes, times 16%. So we love that. Yeah, so with that, I'm done with additional information number 2. So I'll go to zero rated. So the zero rated, we were told that it was 418. So this is what happened when an item is zero rated on VAT. Just say equals to, you will take the item, which is 418. Then you multiply by a tax rate, a VAT rate of 0. Yeah. Yeah, you multiply by 0. Yeah, so you'll get your value there. It's giving me 0. Yeah, so it's giving me 0. So it's negative. Then we have exempt. Exempt means it has been exempted. So you don't charge VAT on it. So exempt, yeah, because we are still under sales. So exempt also, it's I just put, you just put a dash. Huh? Yeah, I just put a dash for that. Sorry, shift, and yeah, you put that, yeah, to show, yeah, you have to, in your VAT account, you have to include this so that the KRA can be able to see that there was no tax paid, it was exempted. But for zero rated, it's supposed to be 0 here. It's supposed to be 0. You have you have to show it clearly that it's 0 and the other one is exempted. Yeah, so I'll go to additional information number 3. We have cash purchases, and we are told that standard rate was 1200, exempt 500. So purchases are input. Yeah, so I just come here and write purchases. Then I'll go to standard, start with the standard rate. Then the amount will be times the VAT, which is 16%. So the standard rate here will be this. Yeah, there was no adjustment on that. And I'll multiply by 16%. Then the next item will be exempt. Yeah, exempt, I told you that for it, you don't tax anything. So just put a dash. Huh? So I've done that. So I'll go to number 4. The exempt sales were all from the batch of exempt purchases with some remaining in inventory at the end of the month. Yeah, so it's okay. If it's remaining there, it means that it's part of the closing inventory, which already we are given down here on additional information number 12. So I'll go to additional information number 5. During the month, Mwanaisha paid rent for the business premises for the month of March. Rent is charged at shillings 80,000 per month. Yeah, so there's VAT. There's VAT on chargeable on rent paid when you are renting or hiring or leasing, yeah, of non-residential buildings or premises, the commercial building. So this way is where she's doing business. So it means that there was VAT which was supposed to pay, but the building owner is the one who is required to register for VAT. Yeah, the one you are paying. Yeah, if she was receiving, if Mwanaisha was receiving rent from a tenant on a non-residential, then we could have charged VAT. And there's also a threshold which is put by KRA for one to be, it's around 280,000, minimum of 280, yeah, almost 280,000 per month to a maximum of 5 million per year for one to pay VAT on rent. So in this case, the lady was not supposed to pay VAT on rent because she's the one who is paying the rent. Yeah, the rent is not being paid to her. She's not receiving rent. So we avoid this for VAT. So this does not qualify for VAT. So we go to additional information number 6. Yeah, the business reported actual credit losses of shillings 20,000 and another expected credit loss of shillings 50,000. The credit losses are item. Credit loss and expected credit loss are all items of the balance sheet. So they don't affect the VAT account. So we ignore this information. So I'll go to additional information number 7. A supplier from whom the business had made purchases of shillings 292,000 and a customer to whom goods were sold at standard rate in January 2023 and still owed shillings 325,000 were declared bankrupt. Yeah, so in a case where the supplier has been declared bankrupt, whether in a case of bankruptcy, then those are bad debts. Huh? So a claim made when a supplier has not been paid by the buyer from the goods supplied are treated as bad debts. So, however, the claim should only be made after 3 years. And you can see all this transaction happening in January 2023, and we are in March 2023. So it's within 2 months. Huh? So even the 3 months has not expired. So we cannot claim VAT on this. Yeah, we cannot claim the VAT. We have to wait for 3 years after the person has been declared bankrupt by a court of law. Yeah, so this information was not necessary. So we go to number 8. At the end of every month, Mwanaisha prepays the electricity for the following month using prepaid meter tokens based on standard usage. She paid shillings 42,500 for April 2023, but she had repaid shillings 38,500 for March 2023. You know, what was paid for March 2023 was paid in February. And we said this is the tax point. And we said that for VAT, we look at the point when the actual tax was paid. So if we paid in February for March, then it means that VAT is supposed to form part of the February VAT account. And if he paid for April in March, then we have to put the amount for April, the prepayment for April in March. Yeah, because that's the tax point. That's the actual point in time that tax was paid. So in this question, we are all going to charge 42,500, not 38,500. 38,500 was charged in February, while 42,500 is charged in March, though it was a prepayment for April. Yeah, so just say electricity. electricity. Yeah, so for the month of March, we'll use the prepayment for April. So it will be 42,500. And I think it's 42.5 because I'm using these other values in thousands. Yeah, these other values were in thousands. So if it's 42,500, then it will be 42.5. So I'll multiply that by 16%. Yeah, there's VAT of 16%. So I'll just say equals to, yeah, I'll introduce the equal sign. This equals to, then I enter. So I'll have 6.8 as the VAT. 6.8 as the VAT. Then I'll go to, yeah, the other additional information is number 10. Other expenses paid during the month is telephone. So I'll also charge telephone. Say telephone. And telephone will also have the rate of 16%. Yeah, they said otherwise, stated otherwise. Yeah, so the standard rate is 16. So I'll pick that amount for telephone and I'll multiply by 16%. Yeah, but as you can see, telephone was in, yeah, these shillings, we were not given thousands. Huh? So I'll have to correct this. Let's say 13.2, because it's 13,200. Yeah, so I'll put it 13.2 is when I multiply by 16%. Yeah, so that's the VAT for telephone. So I'll go to the next one, is audit fee. So I'll write audit. So the audit fee will be, yeah, it's including VAT. So this was inclusive of VAT. So I'll pick that. Yeah, and multiply by 16, divide by 116. Yeah, that's how you do it. Yeah, and I'll be able to get that. Let me undo that. Because even for that, it was not in thousands. So let me pick it in thousands. So it's 111. Goes to 111 times 16 divided by 116 because it's stated otherwise. Yeah, so it's inclusive. Yeah, so and I'll get 15.3. So then another item is stationery, which is 36. So I just write stationery. So it's 36. So just equals to 36 times 16%. Yeah, 16%. So the VAT will be 5.76. So I go to additional information number 11. Mwanaisha made donations to registered charities consisting of shillings 100,000 in cash and shillings 280,000 in form of goods. So any donation to a registered charity is not chargeable for VAT. Yeah, so we don't charge for VAT. Yeah, because that was a donation to a charitable organization. So I'll go to number 12. Closing inventory for the month of March 2023 was valued at shillings 340,000. So I'll place it here. Yeah, the closing inventory is on the output. Yeah, it's always on the output VAT. So closing inventory. Yeah, so I'll put it here. It was how much? It was 340. 340. Yeah, so with that, I've done everything. So the question was whether there's VAT payable or refundable. So we look at the values, we'll add the input VAT and output VAT, and we look at the side which is higher than the other. And the balancing figure is what will guide us whether the VAT was VAT payable or VAT refundable, whether there was a claim, yeah, or there was something to be for the Mwanaisha to pay back. So this is what I will do. I'll just do my working here. So I'll just we'll start with the input VAT. I'll sum it outside. So I'll pick this, and just equals to, and I'll pick this plus this plus this plus this plus this. Yeah, so from the look of things, you can see that the input has 222, but already when you look at the closing inventory, only the closing inventory has 340. So it means that this side is higher than this other side. So we'll have a VAT payable. Yeah, we'll have VAT payable on this other side. That's the balancing figure. So I'll write here VAT payable. VAT payable. Yeah, so I'll look at the amount. So the amount will be, I'll sum this. So I'll sum this plus this plus this. So that will be the total, 637.92. So I'll also put it here. Yeah, so I'll create the top border. Create the top border. And I'll also create it here. Top border. Yeah, then I'll create the bottom to close the account. Huh? Yeah, I'll create the bottom double border. Do the same here. Bottom double border. Yeah, so let me bold this so that you can see it clearly on your side. So I'll bold it. Yeah, so the balancing figure here we say was the VAT payable. Yeah, VAT payable. Yeah, so the VAT payable, let me just do this. The VAT payable will be the difference between this minus this. Yeah, so the VAT payable was 415.94. Yeah, 415.94. So I'll bold it. Yeah, so it balances the VAT. So there was a VAT payable of, so I can just write it here, VAT payable of 415. Yeah, of 415.94. Yeah. So that's how you are supposed to do this question. And you will get yourself 20 marks. Yeah, you'll get yourself 20 marks. So until next time, thank you and bye-bye. And please subscribe to my channel and WhatsApp me for classes, which will begin on 21st of this month, which is May. Thank you so much and have a blessed evening wherever you are. Thank you.